Good evening, bonsoir, buenas noches, buenas noches to investors in North and South America. 我係個 Geomancy， 안녕하세요， สวัสดีครับ，各位早晨 ，Good morning to investors in Asia. Buenas noches, buenas noches, good night, good night to investors in Europe and Africa. I'm Danny speaking from Hong Kong. It's 17th July here and 16th July in Wall Street. This week, I have three main points to talk about. Number one, CPI and PPI turned the market upside down. Number two, interest rate outlook. Number three, NATO in Asia quad and new quad. And of course, finally, there will be some stock recommendation. Subscribe, like, and share. Remember to click the bell, please. Watch our playlist again so as to grasp the continuous trend of the market and refresh your mind. The market had significant changes last week after the announcement of CPI and PPI. Besides the three major indices all went above the watershed of bull market, there's the fourth index, which is the US dollar index. It dropped under the barrier of 100 points, which denotes the market sentiment has changed. Since the June FOMC meeting, the top box chart showed there would be two rate hikes in the rest of 2023, but CME target rate showed there would be only one rate hike. Therefore, investors were speculating whether there would be one or two rate hikes this year. But after the announcement of CPI and PPI, it is not a question at all. What the market is most concerned about is when rate cut will start soon. First of all, we have to take a look at the various sectors of CPI. The main figure has dropped from 4.05% to 2.97%, where generally people just say from 4.0 to 3.0%, and market expectation was at 3.1%. As for core inflation rate, that is excluding food and energy, dropped from 5.3% to 4.8%. Market expectation is 5.0%, but there's still one more sector known as core service inflation, that is excluding housing and energy. That is the sector where Jerome Powell cares most. It dropped to 4.01%, the best since late 2021, even lower than March 2022 where the rate hike cycle begins. It is simple and clear that since inflation is now under control, even not yet reached the target of 2.0%, but not so far away, but what changes had it brought to the market? In the June FOMC meeting, the top box chart showed there would be two more rate hikes in the rest of 2023, but Chicago rate probabilities show there would be just once. Since then, the market has been speculating on the rate hike, whether it should be once or twice. But last week, together with the announcement of PPI at the annual rate of dropping from 0.9% to 0.1%, and the monthly rate rose just 0.1%, these are tidings of great joy, and people will not argue on whether interest rate should rise once or twice, for it will surely go down soon. The eyes of the market are on when will rate cut comes. So the expectation of starting a rate cut cycle pushed the US dollar index dropped under the psychological barrier of 100 points. Three major indices all went up above the watershed of bull market. Nasdaq is the strongest. It is led by the big seven of MMAAGNT in the form of Ursa Minor changing to Ursa Major pattern. We can see that the bottom lies in October of the Orient Material shower together with the RRP fund flow generated by the Winter Triangle, which pumped capital into the market and made it rise. Another platform is formed on February 4th, the start of spring, which brings the rapid year where I forecasted in video 17 at 2023, 0206, bear turns to bull already, and the breakthrough occurs on May the 6th, the start of summer, where Nasdaq broke the watershed of bull market 12105, and in late June, that is the summer solstice, where Mutiny occurred in Russia and brought about the turning point of Russian-Ukraine conflict. And Nasdaq again broke up and MMAAGNT officially dominated the market. For S&P, we can observe the 6-month chart and can clearly see the breaking of the bull market watershed is at 4189 of early May. And after summer solstice, it is at the second half of the wave 3. Even Dow Jones is the weakest since it reached the bottom of last October. It has formed a multi-headed platform and now is having a breakthrough and just passed the watershed of bull market 34392, and last closing price of Friday is at 34509. So let's go to the interest rate outlook. When the market expects the rate cut will come soon, it is good news, especially when Dow Jones have formed a firm foundation. It means there is a strong support at the level of bull market watershed for it to go up further. The advent of bull market means we should have a plan for the next few years and not just months. It is very easy for us to take profit in the next years, but the hardest thing is that after taking profit, what should we do? At the June FOMC meeting, the rate cut chance was expected at January 2024 and later pushed forward to March and May, but now came back to March 2024. After the announcement of CPI and PPI, the chance of rate hike in the July 26 FOMC meeting is 96.1%. There will not be any arguments, but when will rate cut comes? The CME rate probability shown that it will come on March 20th, 2024, and the chance of cutting 25 base points is at the rate of 39.7% among the 7 probabilities. Number 1, interest rate from 4.25 to 4.50 is just 0.2%. Number 2, from 4.50 to 4.75 is 5.6%. Number 3, from 4.75 to 500 is 27.1%. Number 4, from 500 to 5.25 is 39.7%, even the highest, but not yet over half. Number 5, from 5.25 to 550 is 22.0%. Number 6, from 550 to 5.75 is 4.9%. And number 7, from 5.75 to 600 is just 0.4%. How to read these charts? There's a comprehensive discussion in video 26 at 2023-04010, and for reading of double chart, please refer to video 24 at 2023-0327 so you can understand more on your own and need not to follow others. As for the NATO Summit 2023 in Lithuania, this time besides the 31 members, they also invited 4 more guest countries to form a new Quad. Besides talking about the membership of Ukraine, Sweden and Finland, they also invited Japan, South Korea, Australia and New Zealand to form a new Quad to face against the threat of China in South Sea, East Sea and Taiwan Strait, and use great pages to blame China in the declaration of not abiding in the international law and value. The old Quad is of India, Australia, Japan and the US. It is because China does not want to follow the rules fixed by Western countries and claims there is no such thing called international water, and the whole South Sea and Taiwan Strait belongs to China, and her territorial sea is not just 12 aquatic miles as fixed by United Nations. All others should follow the rules and claims of China. What Western countries want to do is to prevent Taiwan from becoming the second Ukraine. They have decided when China attacks Taiwan, they will unite to have sanctions and supply weapons, but which country should deploy military force depends on their own. Ultimately, Japan may have joint defense with Taiwan, but US already have joint defense with Japan. So if military base of Japan and Guam is attacked, it would also trigger the defense system of NATO. Ultimately, China of course is in strong opposition to the summit, but since the dissolution of Warsaw Pact, which is a strong opponent of NATO, no one has formed a strong league such as to unite Russia and China together with the African, Latin American, Asian countries. It is easy to form a union of more countries than NATO, for a lot of One Belt One Road countries can join them. If they can start to form such a union now, never too late. If so, it can easily come to a balance of power and much better than doing nothing. So for stock recommendations, this time better concentrate on vehicles. Tesla has formed a double top and finished filling the jumping gap. Better wait for the price to drop near to $266 and stay firm before buying. For even the price is supported by 10 SMA, but MACD and stochastic are showing signs of retreat. BYDDY is shooting up too far. Better wait for it to adjust to the 10 SMA and fill the jumping gap at $67. Ford is also forming a double top. That is why I pick up vehicle stocks to talk about, for most of them are in a double top. Better wait for the adjustment of $14.5. RIVN is shooting up too straight and better wait for refilling of the jumping gap at $21. However, for those aggressive buyers who wish to buy at once, can try the RACE for the rising trend is so stable and nice. GM also can purchase at $38.6. Even though the rate hike is the steepest in the past decade, it has not brought about recession, and now the outlook is brilliant and splendid. Hallelujah, Amitabha, Hallelujah, Akbar. Anyway, under the theory of bull long and bear short, there's still a lot of chances to buy and no need to hurry. Tesla is going to have an announcement on Wednesday and is believed to be good news. As for banking stocks, it should be believed in a nice year after rate hike for so long, but also a bad year because of the banking crisis. As for the result announcement of last week, we better observe for some time and we'll be talking about next week. No need to be in a hurry. For bull market has just confirmed starting and still have a long way to go. So again, subscribe, like and share. Sayonara, auf Wiedersehen, adieu, bye bye, see you next week.